Credit card balances and delinquencies are rising according to fresh data from the Philadelphia Fed. Revolving card balances, or the portion that carries over month to month if you don't pay your balance in full, accruing interest rates all the while, hit $645 billion in the third quarter of 2024. That is up more than 50% since a decade low back in the second quarter of 2021. The data also revealing the share of active credit card accounts making the minimum payment is at a 12-year high. And household debt is at an all-time high of $17.9 trillion, according to the New York Fed. So what does this say about the state of the consumer? Here with more, we've got Nick Ewen, who is the Senior Editorial Director for The Points Guy. Nick, good to have you here with us. So what does this data say about the consumer from your read-in right now?
Yeah, I think it says that a lot of consumers are really relying on credit cards to make ends meet. You have prices that are still rising, albeit not as quickly as they were a couple of years ago, but the incomes are not keeping up with that. We've seen prices of eggs skyrocket and other kind of household staples. So a lot of consumers are digging into their wallets to use their plastic. And unfortunately, this really has knock-on effects because that interest accrues at very high rates. Most credit cards have variable APRs. They are coming down slightly as the Fed lowers interest rates, but they still can be 20, 25, almost 30%. And that really adds up over time. So it becomes a really vicious cycle if you're just making those minimum payments and not paying your balances in full and on time.
What credit card trends are you anticipating for 2025?
Well, I think there are a couple of big ones that we've seen. A lot of credit card issuers are wanting to get more wallet share, so more spending from their customers. So they've launched a lot of partnerships, some additional incentives for card members to use their cards. One of the other big things we've seen is a shift towards rewarding those high spenders. So if you're a small business owner and you're spending $200,000, $300,000, $500,000 a year, there are a lot of really great ways that you can leverage credit cards, not just to earn rewards, whether it's cash back or travel points or airline miles, but actually earn elite status with some of these programs. Of course, we love our elite status here at The Points Guy, but you can actually, in many cases, spend your way to status with an airline or with a hotel program without ever doing business directly with that airline. So it's a really fascinating trend. It's one that's been picking up over the last several years, and I think it will continue to accelerate moving forward.
We're also getting earnings from the big airlines, and we're seeing them bullish on travel demand in the year ahead. A lot of airline rewards cards have some good perks. So what are the best travel cards that you're seeing right now from your evaluation?
Well, it's really interesting because that trend of rewarding big spenders, a lot of the more casual travelers who maybe take a few trips a year, a little long weekend getaway and maybe a 1-week vacation here or there, a lot of them are potentially skewing away from some of these cards that are affiliated directly with an airline or a loyalty program. A lot of them like the more flexible rewards cards. So a couple of the really popular ones that we recommend here at The Points Guy are the Sapphire Preferred as well as the Capital One Venture card. Really nice thing is those offer a lot of flexibility. You're not locked into one particular airline or one particular hotel chain, but you really need to ask yourself, what are the rewards that you're looking for? How do you spend your money? Where do you live can actually be a really important factor in picking the right credit card, because if you're in an airline hub, for example, maybe an airline credit card with that particular carrier is going to get you perks like free checked bags, priority boarding, and unlock other benefits. So it's really important that you sit down and kind of look at your own situation and identify if you would benefit from one of those specific cards or if you want that more general purpose card. And a lot of people are really opting for that flexible reward system.
What is the checklist that people should be running through if they are opening a credit card this year?
Number one, most important thing, as we talked about before, with the increasing share of consumers just making those minimum payments, a new credit card is not an excuse to spend beyond your means. No matter how lucrative those rewards are, any interest, any late payments for not paying that bill on time is going to eat into the value of those points. So if you're going to open a card, do not spend beyond your means. I also want to stress a lot of people are really turned off by those annual fees that come with credit cards. Some of them are manageable, $95, $99, but they can go up to almost $700 a year. Crunch the numbers and make sure before you pay an annual fee that you're going to get that amount out of it. And the final thing to consider, especially if you have children, teenagers, consider adding them as authorized users to a card. That can help teach them financial responsibility, but can also give them some credit history so that when they go off into the workforce on their own, they're not starting from scratch. They've already built up a little bit of a credit history. You can make it easier to get approved to rent an apartment, get approved for their own credit card, and can set them up for some financial success in the future.
Nick, thanks so much. Really appreciate it, and a solid outlook for what we could see within the space in 2025. Appreciate it.
Yep, thanks for having me.